And I want to start with Walmart. We know it. We probably shop there. Shares are down 3% this morning, up though 17% year to date. So here's the story. Out with earnings before the bell. Walmart sales grew in the most recent quarter. Shoppers looking for value. They bought more online, and Walmart actually called out they're seeing more buying from higher income households. Comparable sales, again, you hear it time and time again, that key metric of stores open at least a year, rising 4.1%. E-commerce sales jumped 26%. So it's still, it's trying, it's getting better at competing with Amazon. It's not winning that fight just yet, but for sure it's hot on its tails. Walmart did call out higher gas prices. It said that is increasing the value of its inventory. It ate into profits because transportation costs are more now to stock the shelves and deliver those online orders. But those costs were offset by higher sales and bigger gains from its non-retail business, like advertising. Things are doing well there. Walmart left its financial expectations for the year unchanged.
Walmart, last 10 years, track record, Paul, 21% per year.
Yep.
Never
Crazy.
would I have guessed that over a beverage of my choice just 10 years ago.
All-time greats. All-time
Walmart,
greats.
can it perform like Apple Computer? Sure it can. Next.
All right, Intuit. We talked about this yesterday a little bit as well. The stock is down 15% here and down 42% so far this year. It is cutting 17% of its staff. That's about 3,000 workers. It says it's trimming costs. This is the financial software company, by the way. It's investing, again, in AI. It says it's doing that to simplify things, to become a faster, leaner, more focused company. That's their words. Intuit said it expects to incur about $320 million in restructuring charges, largely in the current quarter. But like a lot of companies in the software industry, Intuit's betting on AI. And so we're seeing those job cuts as a result.
Who is not betting? The Boston Red Sox are betting on AI.
Sneaker companies are betting on AI.
Exactly.
Okay. Also, they laid off about 1,800 workers just a couple of years ago. So this is another major reduction there for Intuit.
Can we blame Intuit on Dan Ives?
Hope not.
And we've got, I want to call out Deere. We got a lot of earnings here this morning before the bell. So Deere easily beat second quarter earnings, but it was largely because of a tariff refund. And I wonder how many more companies are going to be calling this out on their earnings call. So
Walmart mentioned this.
They did? Yeah. Okay. So there was a one-time tariff refund of more than $270 million. That's from the Supreme Court striking down some of those emergency tariffs that President Trump had put in place. So that actually accounted for almost all of the earnings beat for Deere. So Wall Street's not loving that. Stock is down 3.3%, even though the stock is up 20% year to date. Farmers, look, they're confronting higher input costs, low commodity prices. Fertilizer prices have soared because of the war with Iran. And now they've got...
Yeah, but it's barely pulled back, right? I mean, in the broad scheme of things. I mean, Paul, John Deere, last 10 years, 23% a year.
Yeah. Great company. It's a cyclical business, but they do a great job.
Dividend payer, I believe.
Yeah, they do a great job.
And they said that construction and power generation segments are offsetting some of the softness they're seeing in the farm business. So they got a benefit from data centers. Exactly. Yes. They too, John Deere, also in the business of AI.
How can you build a data center without a tractor?
Exactly.
You got to have a manly tractor.
Yeah, you bet. A little back.
Got to have an AI tractor. I don't know how that works, but okay.
Okay.
Very good. All right, that's it.
Good.
That's how we roll.
That's all she wrote.
Did you get through this without NVIDIA?
I did, because I talked about it in every one of my reports. I thought people are tired of hearing. I know it's the world's most, valuable company by market cap, but we had to do something else.